But on the real clear politics average, I think Senator Warren has now got a higher percentage than any other candidate either. So it's a very good possibility she could be the nominee. Would that be enough to affect the market either positively? I don't want to just assume it's going to be negative, but would that be enough to affect the market in any way if she became the nominee, not the eventual president?
Yeah, Joe, I think it is. I mean, I think what I hear from investors is they want to know exactly how to position their portfolio, and they don't know right now. And I think what happened when Trump became president is that absolutely everything was in play. And for a lot of investors, they knew that not everything was going to happen, but they used a lot of the maybe it happens as an excuse to own certain equities. My concern with Elizabeth Warren and her candidacy is maybe the exact opposite, is that the uncertainty that she could bring to certain sectors, be it healthcare, financials, energy, is going to cause investors to think that absolutely everything's in play once again, but the outcome would be negative this time for those sectors. Even if it doesn't come to fruition, it might be shoot first, ask questions later, and that is where we could get the market reaction out of her candidacy.
Neil Malhotra is joining us, Stanford Graduate School of Business professor. It's good to see you. And as I said, I'm trying to stay as objective as possible in terms of the various policy proposals from either the Republicans or the Democrats. I've seen it, and it's usually posited by academics. I've seen it in an overall sense that Senator Warren would reemphasize labor rather than capital in terms of treating it better in the tax system or in various ways that wouldn't necessarily, according to these academics, wouldn't necessarily be taken negatively by the markets. Where are you on this? Could it be a positive if labor were reemphasized? Has it lost some support in the last 30 years, for example?
Sure. I mean, I think in the polling shows in the broad public, there is strong support to shift some resources from capital to labor. And, if you look at the Business Roundtable discussion recently, there is an argument that long term, it's sort of better for capitalism to reorient the balance between labor and capital. So I think I agree with Ed that it's very uncertain on how a Warren presidency would specifically affect different sectors of the economy. But I think the view that it's going to be 100% bad for everybody is wrong, that with many policy changes, there's winners and losers, and not everything is purely win-win.
So, Neil, the other thing that I hear, and a lot of times it's from business people that walk this fine line between, I guess they can't support Republicans for social issues, but they don't necessarily support the economic proposals of the Democrats. They just say, well, it's very unlikely any of that could ever get passed. The Green New Deal, for example, or free everything. They say, that's never going to happen. So but that's a weird way to support a candidate that I really don't believe their proposals are ever going to be enacted. So I can support them because of their social stances.
Yeah, I agree with that. And I think it also sometimes forgets that although some stuff is passed via legislation, like Obamacare or the 2017 Tax Act, a lot of things that presidents have the ability to do is via regulatory action, which sometimes gets approved by the courts, sometimes shot down. So I think in a Warren presidency, having very major changes to the economy passed by legislation, going through the House and the Senate, is somewhat unlikely. There's a lot of things that potential President Warren could do on the regulatory front, especially, for example, attacking issues of private equity and how things are handled in that industry, reserve requirements and liquidity for banks, things that could have a direct effect on the bottom line of some sectors.
So, Ed, at Raymond James, which sectors would be affected negatively in your view? It's just a guess at this point, but I think we all know at least three of them. But there are some positive sectors, I think, that you've identified, too, with a Warren nomination or president. Go ahead.
Yeah, no, absolutely. So I think one of the things we've always said about Washington, D.C. is it's never as bad as you fear, nor as good as you hope. So, we're always looking for kind of the silver lining, some of the things that could be positive. A lot of people thought when Donald Trump was winning on election night, that the market was going to get crushed with his presidency. It's been a very different story. So as it relates to a potential Elizabeth Warren presidency, you look at certain things like, does her wealth tax, if it passes, unlock a new round of fiscal stimulus? If we're heading into a recession early on in a potential administration of hers, do we finally get that infrastructure bill? We have a lot of industrials bottoming out right now. Do you see a bid for those names? Do you get a increased bid for utilities? They're already regulated. Their yield, especially if we're doing tax changes on dividend rates or capital gains rates, could become more attractive. Same thing with housing. Same thing with maybe some of the REIT yields that are out there. So it certainly is not all bad. It's more of the kind of fear of what could happen in healthcare or energy in financials that's going to have people looking for some of those safe havens.